Okay, good morning, folks. Good evening, wherever you are in the world.
Good morning.
Let me turn that down on the speakers. Oh, yeah, good morning, all. For those that don't know me, my name is Andrew Lockwood. I am the head coach and mentor at forexsignals.com. Delighted to have been asked to be your guest analyst for the month of May. So sit back and enjoy, hopefully, the way I approach the markets on a daily and weekly basis. Bit of background about me first. I left school at the tender age of 18. I have been in the markets pretty much since I left school. Started off in the London Stock Exchange at the age of 18. At the age of 21, I moved down onto the London International Financial Futures Exchange. You may have seen us before on the television, certain films as well. You may have seen this type of thing. This is, I've taken the sound down, but this is where I used to work, shouting, waving, screaming my hands at people, basically literally throwing around hundreds of millions of dollars on a daily basis. Not that we really got too bothered by it at the time, but it was really a cut and throat business. That is me. That is me there with the old side parting. Yes, I did have hair there with the as the Queen came down to open the exchange. So basically started my trading career, over 50, I'm 55, so that's about 35 years ago now. So I've been in the markets pretty much all my life. I now trade from home as well. And as I say, I'm the head coach here and mentor at forexsignals.com. Now, I am predominantly a Forex trader. So that's basically all the foreign exchange currencies, but I also trade indices. We trade commodities, and of course, we are now looking more at the crypto, which is why this Eightcap platform is of massive interest to me as well, because you've got so much that you can get your hands into on the crypto markets. So predominantly, I'm a Forex trader, and we do basically stream live up to 6 times a day at the Forex Signal site as well. So this is basically pretty the same to me. I do this normally. Actually, I'm on in about a couple of hours' time as well. So I do this streaming all the time. So if you do have any questions at all, I know I won't be able to see them at the moment, but do jot them down, comments and so forth, and maybe we'll get to them at the end, or certainly as I pick up after the event. Okay, so currency markets. That's my big forte. Let me tell you that the biggest reason why I trade the Forex market, certainly since 2006, really, when I started this. To be honest, 2005, I lost quite a lot of money when I came onto the screens back from the open outcry exchanges all basically closed down around the world. So I came onto the screens here. And I lost a lot of money in 2005 trading basically FTSE and the indices and so forth. Currencies drew me in, and I basically had this coded up to me many moons ago. So literally, it's a very simple little platform or indicator that I think is an absolute must if you're trading the currency markets. I really don't know how anyone can trade the currency markets without looking at something like this. This basically tells me what currencies are strong and what currencies are weak at this moment in time. Now, of course, it's a lagging indicator, right? It's lagging indicator. This is actually based on a moving average calculation, so it's going to lag by the nature of it. But basically, it tells me what the currency markets are doing at this moment in time together. So this is like the main 8 currencies that we've got, and the color coding is down here on the left-hand side. So anything that's basically heading up in a northerly direction, 45-degree angle. We love a 45-degree angle to the upside. Anything that's heading up is a currency that's getting stronger. Anything that's heading down is a currency that's getting weaker. I've got a little grid here as well that tells you what's happening on all the different time frames. This one at the moment is a 4-hour chart. So I can see pretty much everything on the 4-hour chart, basically telling me what's going on. So you can see here at the moment, as we speak, Monday morning here in the UK, bank holiday actually in the UK, but not around the world. Monday morning, we are seeing some strength coming into the British pound, this white line. So the money is flowing into the pound at the moment. And you see money is flowing out of this orange line. This is the Australian dollar. Australian dollar, the purple line, that's the Canadian dollar. That is getting weaker at the moment. You'll see the New Zealand dollar. Get the theme there. These are the commodity currencies. These are the risk off currencies. They're getting weaker at the moment. So as a trend follower, I like to buy the strong currencies and sell the weak currencies. So just so you know, there's two strategies really that I trade and that you're going to get to see me talk about over the next month or so. Two strategies in my tool bag. That's all I've got, just two strategies. One's an intraday trend following strategy. I like to follow the trend on the lower time frames, on the 1 hour and the 4 hour charts. In my younger days, I was down there on the lower time frames, the 5 minutes and so forth. A bit too busy for that at the moment these days. But I like to trade intraday following the trend. But also in my tool bag, I have a counter trend trade. It's on the daily, basically looking for the big reversals on the daily chart. I'll talk about those later. But those are my two strategies. And this momentum meter really does help me in looking at the best trending markets at this moment in time. It doesn't, unfortunately, predict the future, but it tells me where my edge is. And trading, it's all about having an edge. Why am I going to be, for example, looking at these two currencies down here at the moment, the Australian dollar against the New Zealand dollar? They're moving together. There's no real edge in that at the moment. They're just basically moving together. I want to buy a strong and sell a weak. You can see why I want to be using that. So we'll look at that in a moment. So my first week is going to be an interesting week because we've got quite a lot of news out this week. Now, normally, the way I will play my trading week, normally on a Sunday, if my family permits, and we haven't got any big events going on, normally I set out my trade planning for the week ahead. And that basically involves two simple things. First of all, I go through the economic calendar. Busy week coming up. We'll look at the economic calendar in a moment. And then I look out and plot key levels of support and resistance, supply and demand, whatever you want to call them. I plot them out ahead of the trading week. And I do that ahead of the trading week. This is on the daily chart, by the way, and the weekly. So I don't have any sort of bias at the moment in time when I'm looking to trade during the day. I don't want to start just putting in lines just because it's like basically curve fitting. So I like to do that ahead of the trading week. So that's two things that I would normally do on a Sunday, if not very early on a Monday. For the week ahead. So let's have a first look at the economic calendar. So if you are new to watching me, if you haven't seen me out there on the platforms before, you know I'm more of a technical trader, i.e. looking at the charts to determine my entries, my buys and my sells, but I also look at the fundamentals just basically to make sure I don't get caught out. I don't want to be placing a trade ahead of a major news announcement. Let's just talk about the fundamentals of what we can expect this week. Now, this is a site many of you may use. We do have our own version at Forex Signals as well. They're pretty much the same. We take the feed from some place such as this. But it's really important, I think, that you know what is coming out the week ahead. And there's color coding down here as well. If you're completely new to fundamental analysis, I do suggest maybe you have a look at this site or indeed our site if you wanted to. But the color coding here, basically anything in red is deemed to be high impact news. Okay, that means it's likely to have a big impact on the market. Okay, and here today, Monday, in the US, this is set to my time zone. As I say, I'm in the UK, and you can see my time up here at the moment. It's not 2:09, it is 7:09. Let me just change my time period to that. Save the settings. So basically, well, you set your time period there. What is it? I'm going to set mine to. We are GMT +1 here now. I say I normally use my own, but there you go. GMT +1. There you go. Okay, so that's basically my time zone at the moment. Wherever you are in the world, set your time zone, and then this calendar will basically revert to your time zone. Okay, so this time here will be your time zone. So it's an easy place to see exactly when it's coming out. So at 3 o'clock this afternoon, London time, we've got ISM manufacturing PMI. PMI is a purchasing managers index. It's a forward-looking indicator. It's basically a survey with all the business leaders in manufacturing, how confident are they about the economy, how confident they are about employing staff and building and the outlook. Anything above 50 is deemed to be an expanding economy. It's deemed to be a hawkish economy. Anything below 50 is an economy that is contracting. Central bankers love a PMI. A lot of news about central banks this week. First off, so we keep an eye on that one. Anyway, first off, tonight, if you are in Australia, I'm sure you're aware you've got the cash rate. This is when the central banks change or make decisions on their interest rates. really, really important. This week, we've got the Australian. They've been pretty much flat. They've not been wanting to move their interest rates. They've been very vocal about not moving their interest rates. But anyone that follows the economics would have seen last week, we had some really strong inflation numbers in Australia. Unfortunately, Australia can't get away from the global phenomenon of this massive inflation. You've got 8% out in the US. You've got 6% in the UK around abouts, and even the Australia put out a read. I think it's 5.1%. So big inflation. Central banks have to control inflation. They control inflation by moving interest rates. The likelihood now is that the RBA are going to move their interest rates maybe up by 0.15 of a basis point. Only a few months ago, they were saying they're not moving interest rates, but now they're going to have to succumb to the pressure potentially as well. If they do not move their interest rates this month, then you can expect the Australian dollar to trade lower. So keep an eye on that at 5:30 a.m. UK time. I think you are 9 hours ahead in Australia. But keep an eye on that, because if they don't move their interest rates, you can expect the Australian dollar to trade lower, as the market is pretty much pricing in now a hike of 15 basis points. Okay. Again, I'm not going to go through all the economic releases. We'll just go through the main ones. JOLTS, that's the new jobs in the US. We like to look at that. It gives an indication of employment. You've got employment in New Zealand. That's another red flag. New Zealand, they've already started to move their interest rates. They've had 2 hikes already. So they are on that rate hiking cycle as we go. If this employment rate continues to drop, then that is obviously going to put pressure on prices, as more people have jobs, more people are spending money. More people are spending money, well, up go prices. If up go prices, central banks have to move. So keep an eye on the employment. If you see a big drop in employment this month, then you can likely see maybe a follow-on in interest rates in New Zealand. Remember, where interest rates go, so should the currency follow. Okay, then we've got FOMC. So this is the Fed. They have their rate decision on Wednesday, 7 p.m. London time. That's going to be early morning for you in Australia. That's going to be 2 in the afternoon if you're in the US. 7 p.m. here. Of course, that is when the Fed decide on interest rates. It's likely that they are going to be hiking their interest rates by 50 basis points. It's pretty much in the market. Okay, so if you see a 50 basis point rise in the Fed funds on Wednesday, I think that's pretty much priced in. It's baked into the pie. Buy the rumor, sell the fact. If you do see just a 50 basis point rise, then you may see the US dollar trade lower this week. There are some out there, some analysts, some economists out there actually calling for 0.75 basis point rise, 3/4 of a point basis rise. Are they going to keep a hold of inflation? You know, inflation is rampant across the world, no least out there in the US. And then, of course, we've got Bank of England on Thursday as well. So the Bank of England, they are likely also to move their interest rates. They've already started moving their interest rates. The market is now pricing in a 25 basis point rise in interest rates. Okay, so again, if they don't raise by 25 basis points, you can expect pound to trade lower. I don't know if they are likely to move any more than 25 basis points. No, the vote is here. There's 9 committee members. They're voting basically, or the analysts are saying 8 are going to vote for a hike. There's one of the panel members is likely to vote for unchanged. If they do unchanged, the pound will trade lower. If they put in a 50 basis point rise, really to curb inflation, to make a big sign, then you can expect the pound to surge higher. Okay, so that's basically where we are at the moment. This is a quick look. I always keep an eye on this. This is really, really important. This is the bond yields. Okay, this shows us where the bond yields are currently trading. At the moment, you've got all these currencies up there: New Zealand, Australian, US dollar, Canadian dollar. All these interest rates are pushing up. You see them all up here. Remember, interest rates move, the currency should follow. But what's significant here is this one down here. This is the Japanese yen. Japanese yen interest rates aren't moving. Flat, horizontal line. This is why you've seen the Japanese currency under big, big pressure over the last couple of months. You know, most traders that have been going for these prop challenges, a lot of them have been making money because they've just basically been buying the yen crosses. That's basically buying anything against the Japanese yen, and it's very difficult not to have made any money. Things are changing a little bit at the moment, but the Japanese yen flat interest rates. That's why the Japanese yen is under pressure. And of course, with all these interest rate decisions this week, we need to keep a look on these interest rates to see where they go. This is the 10-year bond yield. It's an indication of where they're going. You've got the US up there just short of 3%, and pound down here, British pound, the gilts, basically 1.9. Okay, so what I normally do ahead of the trading week is plot out my support and resistance. And I do this basically by looking at the line chart. Okay, now the line chart removes all the wicks, the highs and the lows. If you're struggling with your trading, if you're taking the wins and taking the losses and you can't seem to make any headway, this exercise for you, I think, will be really, really good. Basically, put in your daily support and resistance, and don't trade if your profit target has to be through one of these key levels. You will find your win-loss ratio improve massively just by doing that very, very simple exercise. Now, it's sometimes difficult as traders not to take a trade. Everything else aligns, but then, and you want to take that trade, you want to be in that trade. Set yourself that rule. If it's through a major level on the daily or the weekly, sit on your hands and do nothing. Difficult as that may be, that is the way you'll improve your win-loss ratio. Now, at the moment, there's not a lot of resistance in here. I'm using this trading view chart here at the moment because I can do multi-time frame analysis. So what I do here, I like to put out the daily and the weekly, and I do that normally with different colors at the moment. So if I just expand that out at the moment, okay, and I'm going here now to the line chart, okay, that's basically the closing price. So we're not looking at the highs and the lows. That's noise on the daily. We don't need to see that. Just who won the battle on the day. And I like to plot in my levels accordingly like that. Obviously, you've got one down there. Anything with a big, big V at the bottom, big, big A, any levels that have been respected more than twice, you would have as a level. And of course, doing this will massively help your win-loss ratio. Once you go back to the candlestick chart, of course, we can put in a few more down here as well. So do this over your trading entities. Of course, there's not much on the upside at the moment. I think we're at almost 20-year highs now. As I said, the Japanese yen's been under pressure. Once you've done that and you go back to the candlestick chart, okay, so these are the levels. So basically, I am not going to trade this short if it's coming into this level here at 128.85. I'll just leave it for another day. But again, I'm trend following intraday. So we do that on the daily. You can also do that on the weekly. I don't think it's going to be hugely different on the weekly because of, well, as I say, we're basically being here on sort of 20-year highs, but the weekly will be the same. If you do plot it on the weekly, maybe use a different color, and that way you've got that ahead of the trading week. So let's just have a look then. Let me do one more, then I'll just have a look at what I'm looking at this week in terms of where I think the markets will go. Let's say pull up. I'm going to pull up, for example, the euro against the pound. Okay, in fact, I've actually done my euro pound already. So let's do something one I haven't done before. Pound against the CAD, maybe. Now I've done that one again. See, I always do these as head of the week, as you see, just picking up one completely randomly. So this is now the New Zealand against the CAD. Pop that down to the daily, okay, and head over to the line chart and plot in the key levels. The idea is not to have too many of these. You don't want to be having so many lines on here that you just basically don't do anything, just the key levels. Okay, so there we go. We've got one down there. You've certainly got one up there, a bit of a ways away. You've most probably got one in there at 84, sort of 40. So I will pop one in there. Again, doing this ahead of the week, so you don't have that forward bias, if you like, where that bias when you're actually on the trade and you're looking for, reasons not to trade or to trade. Have it done beforehand. Basically, takes away all the the natural bias that you may have. And again, not a great deal to the downside. Let's have a look at the weekly now. So I'll put another color in for the weekly. So I put in the weekly down there. I'll just change that color to make it, there we go, make that a different color. So I know that it's a weekly level. And there we go. So the weeklies go in at a different color. You've maybe got a weekly up there. And you've most probably got a weekly in there as well, pretty much above. So do this exercise, as I say, across the different currency pairs. Head back to the daily, head back to the candlesticks, and there you have it. Okay, so that's basically the levels that I will be looking at for those. Again, do these across the other currency pairs. Right, let's have a quick look then at what is going on, and then I will leave you. This is just the first introduction. Obviously, once we get going into this, we'll be just going straight into the charts. I want to look at this momentum meter again. So this week, we are seeing some continuation of strength in the pound. The US dollar at the moment is looking strong. I'm looking now potentially at buying the US dollar against any of these low yielding currencies. So buying the dollar against the Australian dollar is most probably not a bad little trade at the moment. That basically means you sell this currency pair. So we've broken through this key level of support. Now, I am a trend follower. I never sell the bottoms of candles. I like to wait for a pullback into, well, there's various criteria. I like for it's a 50% pullback from a level of significance. 50%, by the way, not a Fibonacci number. A lot of people think 50% is Fibonacci. It's not. It's not in the sequence, although retracement traders do use 50%. But I like to use a 50% pullback from a level of significance. I also like to use price action as well. So at the moment, we've just broken through this level of support. We've taken this low down here. I'm just dropping down to the 4-hour chart here. So I am going to be looking at this level at the moment, around the 71 level. If we pull back in here, that's not a criteria on its own. If we pull back into the 71, I'll be looking for price action in the form of some bearish patterns, a bearish pin, a bearish engulfing pattern, something like that to confirm. As traders, we never know when you're having that pullback whether it is going to be a pullback or whether it's going to be a reversal. That is why I like to look at price action to give me a clue that indeed it is just a pullback. So I will look for patterns such as the bearish engulfer. Haven't really got one in here at the moment, but bearish engulfer basically means when the far right handle fully engulfs the previous candle, gives you an indication that the pullback was just a pullback. So I'm waiting for a potential pullback into that zone with an entry to continue on. Remember, you've got the strong dollar and you've got the weak Australian dollar at the moment. Now, of course, central bankers could mess all that up this week. We know that. We've just gone through the economic calendar. Of course, we'll have to wait and see on that. But until that happens, and we've still got a day and a bit before the or 2 days really before the Fed decide, and we've only got we've still got a day or so before the RBA decides. At the moment, I'm not taking the trade right into the announcement, but intraday today, that to me would be a trade looking for potential pullback into that area. You can also look at the other commodity currencies. Again, another key level here, the New Zealand dollar. Again, we've broken through this little pattern here. See this candle here with my crosshairs. There's my drawing tool. Can I put my drawing tool up? Does it? There we go. Let me just do this so you'll be able to see it more clearly. So this little pattern here, okay, we have the breakout of this key level of support. It pulls back, puts in this bearish candle here. That is a bearish pattern. Stops above there, trend continuation lower. You've got a weak New Zealand dollar. You've got a strong US dollar. That is the edge. I'll be looking for simple price action. Don't use many indicators. Just maybe look at the ATR. I do like a 2 ATR pullback as well. So we trade a 2 ATR, 50% or pull back into resistance or indeed support if you are buying. So that's a bearish little price action pattern there. You've got trades going on there, possibly stops above for trend continuation lower. And indeed, you can maybe look at the other commodity currencies, the Canadian dollar. They are going to basically follow oil prices at the moment. Oil prices coming off their highs. But Canadian dollar against the US dollar, we are at these levels. I mean, anything really against the US dollar is making money at the moment. But again, we had this little pullback and we have this engulfing pattern here. We've got, now, so would you take this trade? There's big level here, 128.90. It's 15 pips away from what could be a significant level of resistance. I'm not going to take a trend continuation trade through that level. We're coming into a big level there. Sit on your hands. Wait for the next setup. If we break through there, we've got another resistance at 29.40. So there's no real edge in this currency pair at the moment. So out of those three currency pairs I've just looked at, what am I going to take? Well, I think the Aussie, the New Zealand against the US dollar, may be better than the Canadian dollar. Right, apparently I'm just over my time limit now, so I'm going to have to wrap this up. I'll be back on Wednesday and we'll go through some more charts as well. So make sure you tune in for that. Leave a comment as well here on the channel here. Leave a comment. Let me know if you want to look at anything in particular for the sessions going forward. If you want to look at some cryptos, if that's your thing, let me know. We can look at some cryptos, where they look at the some altcoins. We can look at some commodities as well. But as I say, most of the follow-on streams from now won't be going through all these technicals. All the fundamentals and so much. Now you know basically my style of trading. So look forward to seeing you on Wednesday. If you want to come and join us, of course, as I say, I am the head mentor and coach at forexsignals.com, which is basically, this is our trading room at the moment. They're all chatting away in there. We've got streams up. I'm actually on a stream very soon as well. So you can catch me there should you wish to. Okay, folks, that is about it. Look forward to seeing your comments. Let me know what you want to look at, and I will see you on Wednesday. Check out the schedule for that. If you got to make Wednesday, I'll see you same time next week, Monday morning, for the week ahead. Have a good week, guys. See you soon.